Welcome back, everybody. Bitcoin and the crypto markets have been getting crushed this past week. We're going to talk about why that is and why it's likely going to get much worse. We're going to start off with some recent news, break that down, and then dive into some price predictions and chart analysis. So let's get right to it. The first thing I want to cover are just some of the likely catalysts for this, major move, this major downward move in the last week or so. The first thing that's contributing to this in a major way is the recent CPI print. So recently, the Fed announced that inflation month over month was at 8.6%. And so, year over year in May was 8.6%, and that was above expectations. So whenever CPI is higher than expectations, you can usually expect a sell-off in the stock market and also risk on assets like Bitcoin. The other thing that we want to note is that fuel oil was up 106% over the past year. So that's crazy. We're starting to see a, serious issue for a lot of citizens in America and across the world in terms of squeezing for their budgets. Same thing on that thread with shelter costs. So shelter costs have now accelerated the fastest this last year than in the 31 years prior. So we're seeing a lot of things draining away from people's funds, and a lot of these funds that they may use to invest in things like Bitcoin. And the other thing that I wanted to note to add to that issue is that real wages have actually declined 0.6% and 3% year over year. So while the dollar has lost 8.6% of value, Americans are actually making 3% less. So a serious loss for folks, and it means less money in people's pockets to invest in the long run. Now, the other aspect of this is there were worries of a bank run. So the crypto lender Celsius paused withdrawals. This was, I believe, just this morning or yesterday. And so what happened was, with how much the Bitcoin price had fell and Ethereum price had fell, these loans, and in terms of how fast people were trying to withdraw or take their money out or transfer it somewhere else, that pace was too much for Celsius to keep up with and was going to lead to a bank run with a lot of these staked funds and a lot of these loaned out funds actually going to zero. So definitely some concern there. I think we're starting to see the pressure really mount for some of these companies that were really relying on Bitcoin and the crypto markets to stay stable and to stay relatively, staying to the upside, right? And so we're starting to see if they can actually not, more so bend to the pressure, but not break. Now, the next thing I want to dive into, and I think this could be one of our catalysts for our next leg down and why it might get a lot worse from here. If you are in the crypto space, you've heard of Saylor, you've heard of Microstrategy. Microstrategy is Michael Saylor's company. They're one of the top holders of Bitcoin in the world. And recently, the CFO in May said that it would face a margin call and be forced to sell off some of the crypto that it holds at the 21K mark. So what that means is that they'd actually have to put up more collateral to the loan or sell some of the Bitcoin holdings off if they reach that 21K level, because they've taken so much loan capital out for the purchase of their Bitcoin. So right now, according to this article, they're at a $713 million loss right now. Obviously, when it was up at 69K, they were sitting pretty. But now, obviously, they are taking a serious financial hit and now likely going to be forced to sell off a decent amount of that Bitcoin. Now, it hasn't necessarily been clear to how much Bitcoin this is going to be. The CFO, Phone Lei, has said that it's just going to be some of its Bitcoin holdings. Now, it does hold, 129,000 Bitcoins. So even if it sells off a couple thousand of those, that's quite a few Bitcoin to be dropping back onto the market to be sold, right? So the idea is if we hit 21K, we're headed for a much lower number. And we're going to break down where we could be headed just in a second. The first thing, right before we go to the charts, I just want to hop into a brief recap on on-chain analysis. A decent amount has changed here since last we spoke about it. So I just wanted to recap this. Obviously, self-explanatory. As we go down further, less people are going to be in the money. So that is not surprising. I love to see that the 1-year holders has been relatively consistent. And we've seen this less than 1 month number go down significantly as well. So we've seen this stay above 60, this hover around 30, and this shrinking as well. So we like to see that. The one thing that, is somewhat bearish, at least for the short term, and kind of reflects what we've seen in that downward price action, is we're seeing a lot less in terms of high volume transactions or high amount of transactions here. So transactions greater than 100K are down pretty steeply. But the other thing I wanted to note here, because these were actually flopped the last time we spoke about Bitcoin on chain analysis, but we're seeing more exchange inflows in the last 7 days. And we're seeing outflows somewhat stay level, maybe increase slightly, but we've actually seen inflows for the first time in a little bit surpass outflows. Now, what does that mean? Inflows to an exchange, if you think about it, if you hold a cold wallet or some other form of storage like a MetaMask, etc., if you're setting that to an exchange, you are likely expecting to sell that, right? To sell that for a stable coin or USD, whatever it is, right? Now, if you're outflowing from an exchange, you are likely expecting to hold that asset at least for a brief period of time, right? The Bitcoin that I buy in Coinbase, for example, if I know I'm holding it for a while, I'm going to send it to my ledger and keep it in cold storage for, the absolute best safety. But since we've now seen these flop, it's showing a little bit more seller sentiment, or at least people wanting to be ready to dump some of their Bitcoin. So we're seeing a little bit more interest in terms of people wanting to get onto exchanges with their Bitcoin, meaning that they might want to take action with it. Now, whether they do or not, that remains to be seen. But with that pending liquidation potentially in the next coming weeks, I think people are kind of ready and willing to do what they have to do with their Bitcoin funds. Now, after we've broken that down, I want to hop into the charts because this is going to be important in terms of expectations, where could we be headed, what key levels you need to watch out for, and how to kind of time how you're going to invest in Bitcoin. Now, this is not financial advice, obviously, but I just want to give you guys some parameters to work within and kind of set some expectations. Now, if we kind of go back and remember what the typical bear market looks like for Bitcoin, you'll remember just a couple videos ago, we talked about how this bear market has been comparing to prior bear markets. Now, particularly the most important point I want to point out is how consistent Bitcoin bear markets have been. Now, you're just using this last major one, at least in 17, 18, to kind of show you that it's almost consistently been between 80 and 90%. I believe our second to last one was about 87%. This last one was about 84%, as you see right here. So it's not out of the realm of possibility to do this again. It's actually somewhat expected. So a lot of people are watching for Bitcoin to hit that 80% mark. And once we do, it's kind of like, how much further do we go? We know that historically, a bounce has come shortly after that. So right now, even with this, crazy move to the downside we've seen here in the last week, we're still only roughly, a little under 70% down from our all-time high back here in November, right? So we have to keep that in mind. This means that there is still a lot of downside risk to Bitcoin. I'm not saying that I might not be a dollar cost averager at this price. I'm just saying you have to keep in mind you need to be willing to lose another 20 to 30% of your investment from this present day to be willing to dollar cost average into Bitcoin. So it's just something that you need to be aware of. Now, like I said, we're at 70% right now. What I've drawn here is a little bit of a rectangle, and I've started the rectangle at about 72%. And I've drawn it down to kind of that, 83, 84% where we have seen that historical bear market play before. Now, the idea being that we likely will end up somewhere between kind of this, 85 to, 75-ish range, hopefully with a bounce. Now, that's obviously not set in stone. I'm just kind of going based off of what we've seen before, right? And so I think people need to be prepared for at least another, 10, 15, 20%, drop. I think 30%, not out of the cards, right? But that would be, we're looking at an under 10K Bitcoin. I don't really necessarily see that happening, but I do see us, going as low as 12, 13K, maybe bouncing somewhere and ranging between 12 and 20K and bouncing somewhere in there, right? So right now, I want to assume the absolute worst case scenario, at least based on this rectangle, and let's actually adjust it and make it, even, a worst case scenario. Let's match it to last year's, right? So let's say, or not last year's, last bear market, and say, drop this down to that 84% mark. Now, if we were to say, okay, let's assume that we bounce around that 84% mark, and that would be, let's say roughly 11K, 10.8K Bitcoin. Now let's just, simulate and just kind of extrapolate from that level. So let's say that we do end up falling down to that 10.8 mark. This would be if we were almost right on the nail, matching our loss from the last bear market. So if we were to go this low, we're talking 11K-ish around there. At that point, when we bounce, it's very, very likely, given the macro headwinds, what we talked about with people having less money in their bank accounts on average, a lot of dry liquidity. What I would say, what we want to watch out for here is if we do bounce here at 10.8K, I would assume that we are going to be heavily range bound for quite some time. Now, that upper bound that you want to watch for that range when we eventually bounce, and I don't know when this bounce is going to come. I don't know when we're finally going to bottom. I'm just saying when we do, we're likely going to see heavy range bound movement. And that top end right here is going to be 24.6. Now, this is assuming that we bounce off of 11K, but just something to keep in mind, right? And, we've seen similar ranges, right? Here ranging, here we're ranging even, down here we're ranging a little. So this is quite a wide range, and it's happened before in Bitcoin's history when we're recovering from a bear market. So just something I want you guys to watch out for. We could go as low as 10.5K, 11K Bitcoin, so be careful. At the same time, we could bounce earlier than that. So I'm kind of watching between 12 and 20K for a potential bounce. Really depends how many Bitcoin Microstrategy is going to end up being liquidated for. I think there's a good chance they do get liquidated here in the coming weeks. So just be very, very careful out there, guys. I hope that this was helpful. I think the chances of, that dream dead cat bounce to 32, 36K, I think that dream is kind of fading a little bit right now, if we're going to be honest with ourselves. So let's stay focused, let's stay patient, and thank you guys so much for watching. I'll see you in the next one. Bye-bye.